Chipotle just reported their earnings and the stock is down by about 5%. It's currently trading at $56. So let's look at what has caused this 5% drop today and whether this is an entry point. So for that, let's first look at why the stock is down 5% today. The revenue was a miss by 1.9% and the EPS was barely met. And company also provided conservative guidance and that has caused the stock to drop. In Q4 of 2024, the total revenue increased by 13.1% to $2.8 billion. And for the full year of 2024, the revenue increased by 14.6% to 11.3 billion. With respect to outlook, they are saying full year comparable restaurant sales growth in the low to mid single digit range and 315 to 345 new company owned restaurant openings with over 80% having chipotle, which is their drive through, and an estimated underlying effective full year tax rate between 25% and 27% before discrete items. So let's look at the positives and the negatives. In the positive side, the adjusted diluted EPS rose by 19% to $0.25, and that surpassed the analyst expectation of 24 cents. The revenue growth was 13.1% year over year, and comparable restaurant sales grew by 5.4%, driven by a 4% increase in transactions. Operating margin had slight improvement from 14.4% to 14.6% year over year, and they opened 190 new restaurants in Q4 with 95 featuring their drive-through. And let's look at the negatives. The revenue was a slight miss, just 1%, but still it's a miss. And the guidance, they provided conservative guidance, anticipating comparable restaurant growth in the low to mid single digits, below analyst expectation of 5.4%. And obviously, there are cost pressures, increased costs for food, beverages, and packaging, as well as high labor costs due to California's minimum wage law, impacted the quarter's margins. And recently, there is tariffs, so there is some news going around that the guac that they're going to sell is going to be a bit more expensive because most of the avocados come from Mexico and tariff is applicable. So is this $56 an opportunity to enter this stock? For that, I have to look into the valuation. And before I show you the valuation, I want to clarify that this is not financial advice. I'm not qualified to give financial advice. I'm simply recording my thoughts about Chipotle. So let's look at 2029 valuation. In 2024, they made about $11.3 billion of revenue. And most recent year, the growth was about 14%. And I'm estimating 12.5% because as the company grows bigger and bigger, it's hard for them to grow. And how do Chipotle increase their revenue? One, they can increase the number of restaurants, which they are doing. Two, they can increase the prices, which they are doing. Once in a year or once in 2 years, they're increasing the prices by $1 or $2. So that's going to increase the revenue. And they can also reduce their operating costs because if the same store sales increase, the number of employees will still be same. So the operating cost should be in control. Of course, they will increase, but they can be controlled. So that's how they can increase the revenue as well as the margins. So they are doing the right things. So 12.5% is my assumption. With that, they will make close to $20 billion of revenue by 2029. And based on their gross margins and comparable restaurant companies, I'm estimating 15% net profit margin. Currently, they are close to 11 or 12%, but I'm estimating 15% in 2029 because as they achieve scale and when the same store sales grow up, then they can control the operating costs and they can also introduce some automation like a burrito machine or something, right? Or I've seen a machine which makes salads in Chipotle. So there will be some automation, there will be some operating costs, there will be some efficiency gains. So 15% net profit margin. With that, they'll make close to $3 billion of net income by 2029. Currently, their people are paying them like 40 or 50 multiple, but I think by the time they get to 2029, there will be some saturation, there will be some maturity. They cannot grow as fast, like double digits at that stage, in my opinion. So I'm considering an exit multiple of 30. With that, this company would be worth about $92 billion in 2029. Currently, they have close to 1.34 billion outstanding shares. So I'm estimating 1% buyback. So they're making close to $1 billion of net income, and free cash flow is also within the same range. But since this is an $80 billion company with $1 billion cash, you cannot buy even 1.5% of the company. And also remember that even when they get 1 billion to open new stores, they have to put their own money. So this is a capex intensive business. So they cannot get that profit 1 billion and just do the buyback. They have to put some money for the buyback, and then rest they have to use to open new restaurants, right? Otherwise, how will they get the growth? They have to open the restaurants and also try to increase the same store restaurant sales. So that's why 1% buyback in the next 5 years each year. With that, they will have 1.29 billion outstanding shares by 2029. So with that, the stock price in 2029 would be $71. Currently, they're at 56, right? That's about 27% gain in 5 years, and that's not attractive. Let's look at the great execution case. I kept the same growth rate, but I increased the net profit margin to 17.5% and multiple of 35. With that, the stock price would be $97 in 2029. And with reference to the current stock price of $56, that's a gain of 72%. For my personal journey, I look at the reasonable assumptions case in which I'm looking at a $71 stock price. And I need at least a double in the reasonable assumptions case. So the stock has to fall to $35 or $40 range for me to get a double. So I'm not a buyer of Chipotle at $56. I would wait for the stock to get to late 30s, and that's when I'm going to think about buying this stock. Otherwise, I'm going to stay away. Let me know your thoughts in the comments. Thanks so much for watching.